Let's follow up the time octaves on the gold chart with some price levels. What I'm looking at here, you can see I've got these blue horizontal lines and these red horizontal lines, and I also have some angles going up. So what I've done, I've taken the master octave off the low and developed out the tones that are involved moving upward here. The re tone is right here, it's the blue horizontal line. The mi tone is right here at the next blue horizontal line. Fa is this blue line right here. The so tone is the upper blue line, which is currently out of the price range, which appears like it'll be challenged fairly soon here as gold is making new highs. Now what I've done is create the internal octave between re and mi, and those are the red horizontal lines coming across here between the re and the mi tone. And then I've done the internal octave between the mi and the so tone, so you can see those red line levels cutting across through the price action. So I left the arrows and the initial time counts that I had on this chart before. So now you can take a look across there and see that when we came initially to the re tone, coming off the low, we closed right on the tone. The next day we opened up, broke above it, could not hold, and then had a big outside reversal bar. When you see something like that at an important level like that, you are going to get a reversal push, which you got about a 2-week move down into the re tone here in the internal octave. Next time that level was challenged, we had two time intervals come in right there at that level. That kicked it back down again. That caused this big gradual sideways to down correction where we hit the re tone, and then it moved back up. So then the internal levels will come into play, especially where you have time tones, where we had the fa tones coming in here in time. The large octave and the internal octave came in at this price level that kicked it back into that downward consolidation. And then at the mi tone, the next important level up, that whole area became an area of consolidation, and then you can see how we bounced off the internal octave levels on those red lines throughout that whole process. When we went to the fa tone, we got minor resistance for about a week, and then it broke, and then that became a area of support. And then you can see the price action bouncing off the internal octave tones. The other thing I've put on this chart is a key set of angles to set the trend. The green line is my master angle tool, and that is setting the vibration path for this trend. Now I can establish this around this point in time in December, when I can establish that angle. I have enough information in December of 23 that I can figure out the vibration angle and set that into play. And then what I do when I have the angle of vibration, I'm looking to create the channel for that. And generally, the last swing down, the last high before the ultimate low, is usually a good place where that angle is going to go to contain the market. And you can see that angle was in play here on this big wick bar that got kicked back at the re level. And then the second lower part of that channel, I could not put into play until this low here was formed, and then that was available from that point on out, where you could use that as your area of support during this uptrend. So we're still in this bullish trend. You can see we've had a couple of three big corrections, pretty much sideways corrections. The first one was this area here, which is a sideways to down. The next one was basically a sideways consolidation for many months before the breakout. And then we had this reaction at the 2800 level, so we're just breaking out of that now. We just took out that high a few days ago, and it looks like we're going to make the next run up here in gold. Anyhow, that's how you set that channel. So ideally, from a trading perspective, do you want to take, you're not going to take all those timing signals as trade opportunities. You want to look for retracements inside the main trend and look for the key points where you're getting your up arrow timers, so you can pick your trades in that area. You can also take the counter trend reversal trades where they come at important levels of price and time. So you can see where some of those points are. The first key one would be this one right here, where the two timers were together, where we came back and challenged the ray tone. That was a big one. And then after that, these minor ones, you would not necessarily want to take those as trade signals. The next important signal would come in here at this ray tone after this turned up, and when the meat time tone kicked in, we got this upward break. Then we could establish the bottom of this channel and use that in the future going forward. But then you can see the other important areas. We hit the upper part of the channel at the La tone here. That's a good trigger point. The So and Do up here, good trigger point. So those are the ways you would want to look at that. Any upward trigger at time and price would be a good trade opportunity. Like at this T-tone, at this ray tone, we've got a timer at a price level, we've got a timer at a price level. The Mi tone, we've got a timer at a price level. The La and Fa tone come together on our angle. Anytime we're hitting the master angle is a good opportunity where we have a time indication. This rate tone here is a good indication because we've got our overlap here and our timer. This one here, there's no price level. And then the last long opportunity was this T-tone right here at the Fa tone. So that's how you would look at that. For taking the shorts, you would only want to, you'd have to be more careful, but say something like, just looking back, this area here, the So tone, where we have this timer at this price level, is a good place to take a short. This would have been, we had the retest false break to the top of the channel. Hitting the top of the channel and coming down would be a good one. And anywhere you've had a strong run, a strong move into a time and price level like here, the T and So, even though this was slightly breached, it was a good opportunity to take that short, and then you use the next level down to see what's going to happen. So what happens when you come down, say you took a short up in here and that traded down to this area, when you couldn't penetrate that area, that gives you a good indication, especially after a couple days of consolidation, that you may not get follow through. So you always want to use these levels as target areas, and as you move through these levels, you can then use them as stop areas as the trade moves forward. So that's kind of how you would want to look at this. Everybody's got their own trading style. Not telling anyone what to do, just making some suggestions and showing how I look at this in some of the areas that I would be looking at as good, solid trade opportunities.